Gold just delivered its worst quarterly performance since 2013. Every headline is screaming lower. Every retail trader is piling into shorts. And yet the monthly chart is still printing a buy signal. That is the trap. That is the liquidity engineering that breaks accounts, or makes quarters. Right now, there is one danger zone and one hidden opportunity, and I'm about to show you both. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, with exact entries, stops, and targets. This is not a forecast. This is a plan. Session bias is strong sell. Period. Weekly trend strong sell. Daily trend strong sell. 4 hour, 1 hour, all screaming the same message. Price is trading below every major moving average I track, from the daily 20 at $4,184, down through the 200 at $4,345, all the way to the 5-minute. This is not a dip you blindly buy. But, and this is the critical but, the monthly structure is still buy. That divergence between the monthly order flow and the lower time frame carnage is exactly where the market builds a trap. The herd is positioned one way, and the pain trade lives on the other side. Write this number down, $4,072. That's your invalidation. If we get a daily close above $4,072, the entire bearish structure resets, and we are looking at a fast squeeze toward $4,129 and then $4,164. Until that happens, the default is fade rips and hunt stops below $4,000. That's the institutional lens, first interaction trigger. Write down $4,072 and tell me in the comments. Are you seeing a bounce or a breakdown first today? Comment bounce or breakdown. I'll track it. Let's walk the chart from the top down, because the timeframe alignment right now is nearly perfect for a continuation, but almost too perfect. On the weekly, we have a massive bearish engulfing sequence that closed below the weekly 60 MA for the first time since the 2024 bull run. The weekly MACD is negative and accelerating, and the ADX, our trend strength gauge, is sitting at 51. That's not a tired trend. That's a freight train drop to the daily. Price is pinned below the daily 20 MA at $4,184, and that level hasn't even been sniffed in weeks. The daily 50 MA is way up at $4,383, the 200 MA at $4,345. Those are fantasyland for now. Daily support S1 sits at $3,979.66. That's the first real structural floor. Below that, we have $3,944 and then the big one at $3,887. On the resistance side, pivot point at $4,036 is the immediate barrier, then a 1 at $4,072, a 2 at $4,129. The pivot is your intraday bull-bear line. Stay below it, and every pop is a sale. Now here's what most traders miss. Pause for a second, because this is the retention bridge that separates winning trades from faders. On the 4-hour chart, the 20-period MA is capping price precisely. That moving average comes in right around $4,084, which aligns almost to the dollar with the daily 10 MA. That confluence is not accidental. That's the level algos are shorting. At the same time, the 4-hour MACD is deeply negative. Minus 121, no hint of a cross, but the histogram is starting to tick less negative. That's early divergence whisper. Not a trigger, but a warning. Down on the 60-minute, the picture gets even sharper. The 60-minute 20 MA sits at $4,043. Right now, price is $4,007, struggling below that dynamic resistance. The RSI on the 1 hour is at 33. Not oversold yet, so the door is open for another leg lower before any mean reversion. Stochastics are at 22 and curling. Williams %R is at minus 85, deeply oversold but still capable of embedding. That means scalpers can fish for a quick bounce, but trend traders must respect that oversold can stay oversold in a trend this strong. The key cross-asset linkage I'm watching, gold is inversely handcuffed to the dollar. Right now, the dollar index is rampaging, fueled by rate hike bets. Real yields are rising. That's the fear architect getting dismantled. Gold is supposed to be the fear trade, but when real yields go up, the opportunity cost of holding gold goes up, and that's the liquidation engine you're hearing in the price action. At 3 o'clock, here's the hidden divergence most traders are completely ignoring. On the 1-hour chart, while price has been making marginally lower lows under $4,020, the RSI has actually been carving higher lows. That is a textbook bullish hidden divergence. It often precedes a sharp snapback rally, not necessarily a trend change, but a violent counter move that punishes late shorts. This is the exact setup we'll scalp in. Strategy 1. Keep watching. The 24-hour core news is brutal for gold. Gold heads for worst quarterly loss since 2013 on rate hike bets and a stronger dollar. This is not a one-day headline. It's a macro steamroller. The Fed's hawkish repricing has lifted the 2-year yield, and every basis point higher in real yield steals demand from zero-yielding assets. Analysts are now openly asking whether gold can even establish a floor at $4,000. That skepticism is precisely what fuels a potential sentiment washout and a mean reversion spike. Let's build the narrative web. Policy divergence. The ECB may talk dovish, but the dollar is the cleanest long in the FX space right now, and that keeps gold heavy. Yield spreads. The US-German 10-year spread is widening, sucking capital into the dollar. Cross-asset. Bitcoin has been acting as a risk asset shadow, and if equities wobble further, we could see a liquidity crisis that drags gold down with everything. But eventually, gold will reassert its safe haven bid if the panic deepens. That's the second-order play. My 1 to 2 week directional lean is cautiously bearish toward a retest of $3,944, and potentially an undercut into the $3,887 triple support zone. But, and this is the invalidation, if the dollar index breaks below 104, that bearish lean dies instantly, and gold will rocket back through $4,072. That's the binary second interaction trigger. Do you think the dollar breaks 104 this week? Comment yes or no. I'm tracking consensus right now, and I'll call out the results in tomorrow's video. Most people skip this section. That's exactly where the money is made. Keep watching because I'm about to give you 3 precise trade plans: scalps for the noise, a swing for the trend. We'll start with the fast snipe, then the counter noise grab, and finally the session hold that could run for days. Every setup includes the exact entry, stop, take profits, and the invalidation condition that says get out. Scalping strategy 1, the opening scalp, long bounce at $4,000 support. This scalp exploits the hidden bullish divergence on the 1-hour chart right at the psychological $4,000 magnet. The logic: price taps into the liquidity resting just below the round number. Weak hands get stopped, and the divergence triggers a mechanical snapback. Entry condition: price must tap $4,002 or lower and immediately print a bullish engulfing candle on the 5-minute chart. That's your trigger. Entry at the close of that 5-minute candle, so around $4,004 to $4,006 depending on the wick. Stop loss goes at $3,991. That's just below the expected wick and gives the trade breathing room against the S1 level. Take profit 1 sits at $4,020, just inside the pivot shadow. Risk reward is roughly 1 minute and 1.5 seconds, clean scalp territory. If momentum extends, take profit 2 is at $4,035, right at the pivot point and the 60-minute 20-mark confluence. What instantly voids this scalp? If the 5-minute candle that triggers the entry then closes back below $3,998, kill the trade. No debate. The opening scalp entry, $4,004, 5M bullish engulfing after tapping $4,002 zone, stop loss, $39.91 take profit 1, $40.20 take profit 2, $40.35 risk, reward, 1:1.5R, TP1, 1:2.8R, TP2, invalidation. Void if 5M candle closes below $3,998 after entry. Scalping strategy 2. The liquidity grab, short after fakeout above pivot. This is a counter noise scalp that preys on the stop hunt above the pivot. Here's the setup. Price drifts up into the $4036-$4045 zone where the 60-minute 20 MA and the pivot sit. The herd sees the breakout and chases, pushing price just above $4,040 where stops are resting. Then the algos reverse it. Your trigger. Price spikes to $4.04 to $4.45 and within 2 5-minute candles prints a clear bearish engulfing or a shooting star that closes back below $4,036. Entry on the close of that rejection candle, around $4,040. Stop loss at $4,052, above the wick high and the daily MA5. Target is singular and fast, $4,010, right into the nearest intraday liquidity pool. This is a high execution, one target scalp. If the 5-minute candle after entry closes above $4,055, the trap failed, get flat immediately to the liquidity GRAB entry, $4,040, 5M bearish engulfing after a spike above $4,042, stop loss, $40.52 take profit 1, $40.10 risk, reward, 1:2.5 invalidation. Void if 5M candle closes above $40.55 now. Before I give you the swing trade, I need to know where this community is leaning. Are you scalping or swinging this week? Comment scalp or swing. I want to see the split. Drop it right now, I read. These live. Swing strategy 3, the session swing, trendline short on $4,000 breakdown and retest. This is the trade that captures the continuation if the monthly divergence resolves with the weekly and daily pressure. Remember, the bias is strong sell across all sub-monthly timeframes. You do not fight that with a swing long. Instead, you wait for the $4,000 floor to fail and the retest to offer a low-risk short. Trigger condition. We need a 4-hour candle close below $4,000. That confirms the break of the psychological level and often also cracks S1 at $3,979 intraday. Then patience. Wait for a retest. Price must crawl back into the $4,000, $4,010 zone and show a bearish rejection on the 1-hour chart, a pin bar, an engulfing, a failed auction. Entry on the close of that rejection candle, right at $4,000. Stop loss goes at $4,025. Which is above the swing high of that retest and above the 1-hour 20 MA. That gives you a 25-point risk. Take profit 1 is $3,945, right at S2. That's a risk reward of 1 minute and 2.2 seconds. Stretch target, take profit 2, is $3,887. The triple support and a level that, if hit, would represent a full quarterly cycle low. Once price reaches halfway to TP1, around $3,972, move your stop to break even. This trade remains valid as long as we don't get a daily close back above $4,072. That's the invalidation that flips the medium-term outlook bullish. A daily close above $4,072 says the breakdown was a fake, and this swing is dead to the session SRNG entry, $4,000, after 4 hours close below $4,000 and bearish 1H retest candle, stop loss, $40.25 take profit 1, $39.45 take profit 2, $38.87 risk, reward, 1:2.2 TP1, 1:4.5 TP2, invalidation. Void if daily close above $40.72 never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I stick to 1/4 to 0.5% per scalp. No positions through high-impact news. Check the calendar. Stops are non-negotiable. If the market hits your invalidation, you're out, no questions. This is how you survive to trade the next big move. So here's the single most critical level for the next session. $4,000. Not $4,007, not $4,010, the century mark. A 4-hour close below, it opens the trapdoor toward $3,945. A firm bounce and daily close back above $4,036 tilts the short-term odds toward a squeeze. Tomorrow, I'll be watching whether gold can hold $3,940 or if the selling accelerates into $3,887. And I'll have the updated blueprint exactly 24 hours from now. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen and loop into the session start cycle that the algorithm loves. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the crowd sees them.